Students, welcome to the session on Accounting for Partnership Basic Concepts Part 2. By the end of this session, you will be able to understand provisions relevant for accounting, special aspects of partnership accounts, maintenance of capital accounts of partners, distinction between fixed and fluctuating capital accounts. Provisions relevant for accounting. Suppose there is no partnership deed. In such a situation, the following provisions will be helpful. A. Profit sharing ratio. The profits and losses of the firm are to be shared equally by partners, irrespective of their capital contribution in the firm. Suppose A and B are partners. A has contributed 1 lakh and B has contributed 2 lakh in order to start a partnership firm. Here, we assume that the partnership deed is silent, irrespective of the amount being contributed by them, that is 1 lakh and 2 lakh. Even then, the profit and losses are to be shared by both A and B will be equal. Interest on capital. No interest on capital is payable if partnership deed is silent on the issue. So, as the partners have contributed the capital, they are not entitled for interest on capital if the partnership deed is silent. Suppose, that is, in case the deed provides for the payment of interest on capital but does not specify the rate, the interest will be paid at the rate of 6% per annum. Suppose the partners have a partnership deed, but the deed does not specify the rate of interest. In such situation, interest on capital will be paid at 6% per annum. C. Interest on drawings. No interest is to be charged on drawings made by the partners if there is no mention in the deed. So, suppose the partners have withdrawn the capital. However, if the deed is silent, in such situation, no interest is to be charged on such drawings. Point number D. Interest on advances. If any partner has advanced some money to the firm beyond the amount of his capital for the purpose of business, he shall be entitled to get an interest on the amount at the rate of 6% per annum. So, any one of the partner has advanced the money to the business, that is given in the form of a loan to the business. Okay, then he is entitled to get a interest, okay, and that is at 6% per annum. Remuneration of firm's work. No partner is entitled to get salary or other remuneration for taking part in the conduct of business of the firm unless there is a provision for the same in the partnership deed. Remuneration for firm's work. So, the partners doing the work for the business are not entitled to get any sort of salary or remuneration. That is for taking part in the conduct of business of the firm unless I specify, unless it is being mentioned in the partnership deed. So, these are the 5 important points that you need to remember if the partnership deed is being silent. Special aspects of partnership accounts. 1. Maintenance of partners' capital account. 2. Distribution of profit and loss among partners. 3. Adjustment for wrong appropriation of profits in the past. 4. Reconstitution of the partnership firm. 5. Dissolution of partnership firm. Maintenance of partners' capital account, distribution of profit and losses among the partners, adjustment for wrong appropriation of profits in the past. The first 3 points will be discussed in this particular chapter, whereas reconstitution of the partnership firm, dissolution of partnership firm will be discussed in the subsequent chapters. Maintenance of capital accounts of partners. So how do we maintain capital accounts of the partners? All the transactions relating to partners of the firm are recorded in their partners' capital accounts. So all the transactions relating to partners of the firm are recorded in partners' capital accounts. It includes, so what is the partners' capital account will include? Capital, withdrawal of capital, sharing of profits, interest on capital, interest on drawings, partners' salary, commission to partners, and so on. 2 methods by which the capital accounts of partners can be maintained. 1. You can maintain partners' capital account under fixed capital method. 2. Fluctuating capital method. So now let us discuss on fixed capital method. The amounts of the partners will remain fixed unless additional capital brought in and introduced or proportion of capital is withdrawn according to the agreement. So under this method, the partner's capital remains fixed until and unless there is some additional capital. If there is additional capital or the partners are being introduced with capital or a proportion of capital is being withdrawn. All other items like share of profit or loss, interest on capital, drawings, interest on drawings are recorded in a separate account called partners current account. So this is very important for us. All the items like profit, loss, interest on capital, drawings, interest on drawings, all these things are recorded separately in partners current account. Thus, under this method, 2 accounts are maintained for each partner. 1. Capital account and current account. You should always remember over here under capital account, when you prepare capital account under fixed capital method, the balance remains credit. That is, you will have a credit balance always. So here you have a look of partners capital account and partners current account. So this is the pro forma for you to understand on how to prepare the partners capital account under fixed capital method. 1. Partners capital account. 2. Partners current account. So in the first part you can see that here the capital remains fixed. The capital remains fixed until and unless there is new capital is being introduced or capital is being withdrawn. The second account is the partners current account. Here you can observe all other items like commission, interest on capital, profit and loss appropriation. Profit is on the credit side and losses is on the debit side. Likewise, drawings, interest on drawings. Always remember, anything that increases the partner's funds is posted on the credit side. Anything that decreases the partner's funds is posted on the debit side. Fluctuating capital method. In this method, only one account, that is capital account, is recorded and maintained for every partner. So it is very clear here, you will prepare only one account, that is capital account is recorded for every partner. Adjustments like interest on capital, the share of profit and loss, interest on drawings, commission to partners or salary, etc. are recorded in partners capital account. So that means we have only one account. So here you have the pro forma of partners capital accounts under fluctuating capital method. Since you record both the capital and as well as all other adjustments like salary, interest on capital, profit and loss, profits, losses in one account. Hence, the capital keeps fluctuating from time to time. So, under this method, we prepare only one account. You will be learning more about fixed capital method and fluctuating capital method while we are working out the problems. Distinction between fixed and fluctuating capital accounts. First one, number of accounts. Under this, that is fixed capital account, under this method, two separate accounts are maintained. That's what we discussed. One is capital account, two, it is the current account. Whereas in fluctuating capital account, we maintain only one account, that is capital account. Point number 2, adjustments. All adjustments like drawings, salary, interest on capital are made in current account and not in capital account. So all adjustments are recorded in the current accounts of the partners. While in fluctuating capital account, all adjustments are recorded in the capital accounts of the partners. Third point, fixed balance. The capital account balance remains unchanged unless there is addition to or withdrawal of capital. So the capital account over here remains unchanged. Under fluctuating capital account, the capital account fluctuates from year to year. The reason for this is because we record all the adjustments. We record all the adjustments in the capital accounts of the partners. Point number 4, credit balance. The capital accounts always show a credit balance under fixed capital account. However, under fluctuating capital account, the capital account may show a debit balance. That means you might have a debit balance or you might get even a credit balance. Take up this test, students. Thank you.